let's put the spotlight on Ather Energy. Even that stock is on the roll because, yes, of course, the markets are doing pretty well on the back of the deal announcement. But for Ather, is the results that were definitely fantastic that the company posted this time around. And look at the move in the stock price. It's a more than 12% gain is what we are getting to see. What's the outlook going ahead from here on, and what will be the key drivers? Let's try to understand all of that. And for this, we are being joined by Mr. Tarun Mehta, co-founder and CEO of Ather Energy, joining us on the show. Hi, Tarun. Morning. This is Shrishti. And firstly, let's talk about the kind of growth that we have seen in your market share specifically, because it's been a journey one way upwards for you, is what we can see. Help us understand that what geographies are working the best for you right now, and going ahead, what will be the focus?
Thank you. So Q3 was a great quarter for us. Volumes grew roughly about 50%, revenue grew 53%, gross margin grew 300 bips, and EBITDA improved by almost about 1,400 bips over same time last year. So very strong improvements. We've seen a lot of volume build up over the last few quarters on the back of the new product Rista. Rista has particularly allowed us to expand into newer geographies. So we have seen a lot of expansion, particularly happening in Middle India, which are the states of Gujarat, Maharashtra, MP, Odisha, and Chhattisgarh. We've also seen pretty good gains in North India, in Rajasthan, Punjab, Jammu Kashmir, and even Uttar Pradesh recently. So all of this culminated to give us a very strong operating leverage. We've been razor focused on our engineering to drive costs down, and that's the 3% improvement that you see in our gross margin. And all of it came together for a very good landing with EBITDA in Q3.
Right. Hi, this is Ankita also joining in. Good morning to you. And also tell us, how with the new EL platform, when is it expected to be launched in FY27? And will this help open up the northern region further for you?
Absolutely. So EL is our more versatile scooter platform. It also has a better cost structure, which is more suitable for more mainstream audiences looking for a more traditional scooter. We are set for launch later this year, and we expect it'll do two things: improve margins across existing price points. But given its lower starting cost, it'll also help us introduce lower priced products, expanding our overall
call. I had mentioned that we would be from a 24-25.
Yeah. So we definitely expect EL to improve market share, particularly in Western and particularly North India. We've already seen strong gains. Market shares in Gujarat are at 25%, in Maharashtra we're already at 18%. But if I look at Odisha, if I look at Madhya Pradesh, Uttar Pradesh, Rajasthan, I think there's further potential of 5, 6, 7% market share improvement. Easy, and that I think EL can certainly help us with.
Good to know about that. That's one of those exciting factors. But the other factor is the increase in the commodity prices. Tarun, what's the plan to manage that? Because that's one of the key questions we have been putting to all the auto OEMs, because for Aether as well, we have already seen you taking a bit of a price hike recently. But with the rise in the commodity prices, will you be open to take some more?
So honestly, this is not your traditional commodity cycle. These are some crazy numbers at play right now, which is why we proactively took the 3,000 rupee price hike at the start of January to better manage any potential hits here. We are cautious for the rest of the year on commodities, also partly why we are really focusing a lot on improving margins across the board. For us, we have actually several levers in our business. So increasing ASP of the base vehicle is one. We also have non-vehicle revenues, which have been compounding very rapidly. Already 14% of our revenues come from non-vehicle sources, particularly the largest among them is a sale of software. Our software attach rates, despite a deep penetration in the country today, still stands at 90-91% across our fleet, giving us a very high revenue out of a very high gross margin product. And that's holding up our margins well. We also have charging infrastructure revenue starting to kick in, and accessories revenue particularly starting to ramp up. So we have all these levers stacked up. That coupled with a higher margin expectation from EL in the next 1 year, we think we are well prepared to absorb any potential hits coming from commodities in the coming quarters.
Right. Tarun, also talk to us about the non-vehicle contribution to the revenue, which is 14%. How do you see that growing, and what are going to be the levers for growth?
So non-vehicle revenues traditionally in our business, in the two-wheeler business, has been largely all about spares, which is service, and a little bit from small accessories. Aether, at Aether, our dynamics are a bit different. For us, about half of that, almost 50%, more than 50% comes from sale of software, which is obviously very high margin. A small component comes from service, and a small component comes from accessories. We are very bullish on all three. From a compounding perspective, obviously service we are the most optimistic about, because legacy businesses can command 7, 8, 9% of their revenue also from service. For us, that number is like a fraction of that today. So with every passing year, as the fleet size keeps increasing, we expect the spares contribution in our business to keep rising up quite secularly. And which is why I've been saying that I believe non-vehicle revenues can compound to something like 17, 18, 19% over the next few years. So there's a lot of potential in non-vehicle revenue sources.
Right, that's good to know. But Tarun, along with that, we also saw in your presentation that you have plans to add more of your experience centers. For now, it is close to 600. You want to scale it up to 700. Help us understand which geographies will you be focusing the most on?
So we're targeting about 700 stores by the end of this fiscal. So by basically the end of this quarter, we are quite optimistic about that guidance. The majority of our expansions now coming in the non-south markets. Aether has a strong presence in the southern markets. We actually still the least penetrated, the least distributed product in the southern markets, but relatively we have better presence in south. But there is a tremendous opportunity in the middle Indian markets and the North Indian markets, and particularly the North Indian markets over the rest of the year, I'm quite bullish on. As our product portfolio expands, Rista's entry in our portfolio allows us to go from 200 stores to 700-800 stores. The expansion of EL in this portfolio will allow us to add several hundred more stores in the next few years. I do believe we can get to distribution which matches that of legacy competitors over the next few years.
All right. Those are some great plans there. But lastly, Tarun, just a quick question on the lithium-ion battery cells. It's not with respect to your earnings, but in the latest budget, the custom duty rationalization was done over here as well. You being a player there, just wanted to understand that will this have an impact on the industry players like you as well?
No, I think it was a good continuity of policy. Lithium-ion cells, given that the domestic supply is still quite sparse and not really there, lithium-ion cells had a rebate on import duties, and that rebate seems to have been continued. I'll await for more details, but directionally that's what it seems like, which is a positive. That means a risk of a cost escalation has been pushed out for a few years now.
All right. On that note, thank you so much for joining us. We'll let you go on that note, Tarun. But with that, it's time for us to slip into a short break. Don't go anywhere. After the break, we'll get you more managements on the website. Stay tuned.